Hey everyone, welcome back to Corporate Decoder, the place where we decode the corporate world. Today we're diving into a Form 8K filing which, believe it or not, isn't about a cool new robot, but about a company going public and the agreements they made. This filing is all about Copley Acquisition Corp, a special purpose acquisition company or SPAC. Think of it like a blank check company that raises money with the goal of buying another company. They just completed their initial public offering or IPO. It's like the opening act of a big business play. This document details exactly how that IPO went down and what promises they made along the way. Before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below where you can discuss these topics with other smart people. So what happened on April 30, 2025? Copley Acquisition Corp finalized its IPO on May 2, 2025, selling 1750.25, selling 17,000 redeemable warrant. W2000 units, each unit includes one Class A ordinary share and half a redeemable warrant. Warrants are like coupons that allow you to buy more shares later at a set price. They sold these units at $10 each, bringing in a total of $172,500 before expenses. To make this happen, Copley signed a bunch of agreements. First, there's the underwriting agreement with Clear Street LLC. This agreement outlines the terms of how the IPO is managed and sold. Underwriters are like the company's sales team for selling stocks. Next, we have a warrant agreement with Continental Stock Transfer and Trust Company. This details how the warrants, those share coupons, will be managed. Continental Stock Transfer acts as the warrant agent, keeping track of everything. There's also a letter agreement between the company, its leaders, and the sponsor. The sponsor is usually the team that sets up the SPAC initially. This letter likely covers things like how they'll run the company and what they promise to do. Another key agreement is the Investment Management Trust Agreement, again with Continental Stock Transfer and Trust Company. This is about how the IPO money will be held safely in a trust account until Copley finds a company to buy. Continental Stock Transfer acts as the trustee, ensuring the money is used properly. The Registration Rights Agreement outlines the rights of certain shareholders to register their shares with the SEC, allowing them to sell those shares publicly. Then we have a Securities Subscription Agreement with Copley Acquisition Sponsors LLC, the sponsor. This agreement is about the sponsor buying shares in the company. Next is the Private Placement Unit Purchase Agreement, also with the sponsor. This covers the sponsor buying additional units in a private placement, meaning they aren't offered to the general public. Finally, there's an indemnity agreement with each director and executive officer. This protects them from certain liabilities or lawsuits related to their roles in the company. Moving on, along with the IPO, Copley sold 555,893 private placement units to the sponsor. Some were sold at $10 and others at $7,000. These private units are almost the same as the ones sold in the IPO. The key here is that these sales weren't registered with the SEC because they were made privately to the sponsor. Copley also adopted an amended and restated Memorandum and Articles of Association. This is basically their updated company rulebook, covering how the company is run, shareholder rights, and other important details. What happens to all that IPO money? A total of $173,362,500 from the IPO, and the sale of private units was put into a trust account in the US with Continental Stock Transfer and Trust Company managing it. The money stays locked up until Copley either buys another company, shareholders vote to change certain rules about the SPAC, or the SPAC can't find a company to buy within a set time, usually 18 to 24 months. Finally, Copley issued press releases to announce the pricing and closing of the IPO. These releases are basically marketing tools to tell the world about their success. Now, let's take a step back and look at what all this means for Copley Acquisition Corp. The fact that they successfully completed their IPO and raised a significant amount of money is a good sign. It means investors believe in their ability to find a good company to acquire. However, SPEETs are not without risk. They have a limited time to find a target. And if they don't, they have to return the money to investors. Also, the success of a SPAC depends heavily on the quality of the company they acquire. If they choose poorly, investors could lose money. Looking ahead, Copley's success will depend on finding a good target company and successfully completing a merger. The management team's experience and track record will be key. Also, the overall market conditions will play a role. If the economy weakens, it could be harder for Copley to find a suitable target and to complete a deal. In conclusion, Copley Acquisition Corp has taken the first step by completing their IPO. Now, the real work begins finding a company to buy and creating value for their shareholders. Alright, that's our breakdown of Copley Acquisition Corp's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.